Good evening, everybody, and welcome to another episode of my usual exposition of the theories that you can always look back in my previous videos. And today I will anyway give another proof or examination about my theories, and in this case in regards to currency strength and weakness that I can analyze with my model, with my expert advisor that I have enhanced and now is under study with a new feature for as regard the graphical part that anyway will help in taking some decisions in our trades. Today was a kind of particular week with some strange behaviors that anyway didn't influence it that much the overall performance of my portfolio. And I will start from showing what exactly happened. So first of all, just of course, for all the details and all the things that you may wonder, you can always write me an email or contact me on Skype, no problem. But I suggest you first to watch my previous videos where little by little I expose all the theory of hedging and the model that I have designed in order to read simultaneously at least 28 currency pairs that can be traded because of the proper spread, and because every broker has those currency pairs to trade. And actually the new enhancement that I was talking about, if you see my previous videos, there is not trace of that. Now I have implemented on my model, and I am also testing it. And as you can see, let's see for example in the euro dollar as well as in the GBP USD, here we can see it better. You see that I have enhanced my projections lines, which are a kind of evolution of gun theory, in practical, of course, with these pink lines, the two lines dotted and the one that it's full, with full body, that give an idea. It's calculating basically the fair price of the moment and the range of oscillation of the price, so that if we assume, for example, as I assumed here, that GBP was weak against the dollar, we can also define when to enter our trades based on these lines that then become kind of support resistance. And of course, if we see on a wider time frame, you see that I have this sell level on this line, on this level price. And finally, after some days, as you can see here, we have a swap. So we are in the situation of swing trading. I got this marvelous movement that, as usual, I do reply on a demo account to show you and to expose my theories. And of course, as usual, we will discuss a brief for a while on a statement that I can easily recall. Let me just do that, so then we can talk about. Basically, these lines that of course can be projected on a different time frames, but they are static, so what we see is not changing in this case regarding the time frame, but it's something more stable. Okay, and can be really a good guide to help us understand when some levels are broken, and therefore we can make all the assumption of a case, even if of course arriving on the graphical feature, the analysis must anyway pass for an analysis of the whole market situation first. Well, at the beginning of the week, where this situation where GBP was driving quite, let me just put on the monthly here, was driving quite weak, and between euro and dollar seemed to be the very strong of the moment. Okay, I struggle a bit more with euro against dollar, but I drove very well with GBP this time. And just to give you an idea, let me just open the two statements that then we can discuss. Just do this. Okay. Just a second that I put also, yeah. Okay, let's open that. Okay, so we may see that at the very beginning my positions were of course underlying a strength of the dollar against euro, a strength of the dollar against Swiss franc, that then I decided to close with some profit. So the very first day I got some trades that I realized in a day. Other trades, you may see this swap column as they have a value in a dime, so it's about taking the orders for more days, and I decided to take immediately a bit of profit and to reinvest a part of that on other trades. There are also other positions that I was not very happy at the beginning. That's why I was testing and trying to balance the formula that provides me that levels of support resistance, and I decided to ignore some values and also to focus only on that kind of indication in order to see if it was effective by itself, or if I had any way to correlate the market performance of all the currency pairs, and then contextualize that with the currency pairs that I would have choose for my trades. But basically what we can have from these positions, and this is the first screenshot, of course you can always check the account and the balance, whatever, and I will do a final balance so that you can see also the results. We see that in all the positions that I open, euro and GBP and Swiss franc in this case were weak, and US dollar was strong. So this was the setup for the day from my perspective, from my point of view. And what I decided to do later was trading, just focusing on that indicator without any relation with the market performance. So with the 28 currency pairs that are generated from the 8 currencies that I'm studying, and there were some negative values here. I put, for example, US dollar strong against the Japanese yen, and was not successful. Basically I started and it was in a positive balance, and then I went away, and then when I came back, Japanese yen was reverting and taking some strength. So I should have better stay strict to my initial forecasting outlook, but I wanted to make some extra trades because I was already in positive, so I wanted to give a chance to a prediction that anyway had some limit values, so not very well defined in terms of strength and balance and weakness. And in order to inject our trades, we must have positions of the currency pairs very strong or very weak and put them together. But the overall performance at the end, even if with some positions that I then decided to close, some of them you see they have a little positive, other have little negative, but the overall condition, what I seek is the big movement, the big value. And so this is the second screenshot of my performance, where after an initial curve of €1,000, which is this one, I got like floating in a positive and negative in this range. But then the big move happened at the end, and it happened on a GBP against dollar. And you can always check by opening your MetaTrader platform and do your checks the same way. Now I will just do this final close because I'm tired and I want also to provide you a final statement in live now. Save as detailed report, and we save as detailed report. Okay, so at the end, for this week, today is Thursday, and so tomorrow, Friday, will be as usual a day to be careful because markets are closed, and so there's nothing wrong the moment you have realized a good performance to overdo and overtrade, even because I made some little mistakes and I don't want to lower again. Okay, so I decided to take only the trades that were successful, but as you may see, I had also other trades in GBP, USD and Euro Dollar that were taken for more days with this swap values, and at the end of the week the result was almost 5,000 more on starting on a account of 10,000. Okay, what to say? The situation that was underlined by the charts on a daily, we see the setup at this moment is based on, let me exclude this, on 9 charts. Each one of them, it's on Euro Dollar, but this is not relevant in terms of that I want to study only the Euro Dollar. It's relevant in terms of time frame. In fact, if you see, we have the 1 minute, 5, 15, 30, 1 hour, 4 hours, a day, week, and a month. And for each time frame, regardless the chart we're using, we get the values of the market setup related to the time frame. That it's also indicated in this panel that I will open in a while. Anyway, by giving a look at daily time frame, we already see here that there is a very huge blocks of weakness and strength that are indicated in dollar as strong and in GBP as weak. And if we go in the weekly time frame, we see even more. GBP is minus 1200 and US dollar is plus almost 700. So indeed, this was the currency pair to trade, GBP USD, which was my choice. And you can see the very last one is this, and so on. Okay, and of course I took some trades as well, because it's important that we exit the market, not only enter it, because they can always, institutions can always move and reorganize, at least for a day or two, the setup of the pairs, and therefore we can also have a more difficult situation that can generate something like this, that I don't like that much, but sometimes happen. Even if, of course, at the end it's important that we have made a profit. So this situation was starting like minus 350, minus 370, minus 400. So GBP started immediately to show the weakness also against Australian dollar, even if it was not that much effective, because it has a lot of oscillations, but and ranging, with wide ranging, but the overall decision could have been anyway also with Japanese yen, that took anyway more strength yesterday, not at the beginning of the week. So the final choice was anyway to put in correlation a currency pair with a lot of liquidity like US dollar, and a currency pair with a lot of volatility like pound, GBP, and the result, it's quite positive at the end. So combining these elements with in this case the GBP, and then going on the graphical part, as you can see, even here we are having this situation where my algorithm is picturing the previous line of fair price, okay, and even the previous one, and actually now we are on this one. So let's assume that this line is the previous one. I should have taken a bit more the GBP USD, but for me it's enough. You have to be also capable of stop at a certain point. Okay, so let me just put over another color. Every half an hour, what I'm testing now is an algorithm that every half an hour is an enhancement on which creates the calculated fair price of the chart that I am analyzing, regardless of the time frame. And see that at this point the chart went floating around this level with not that much inclination, and at a certain point this new fair price has been broken more times, and we can also see the volumes that are quite significant in the levels of overbought and oversold. So now the challenge is that yes, at this moment it has just created another level of fair price with a channel. As you can see here, in this case we have a channel that is created by the algorithm that we can follow, and then we can make our assumptions on how the price behaves between these three levels, assuming that this is the fair price of the moment of the pair. And by combining the two things, I think that the results are quite positive, and that makes you smile, of course. And by having this at the same time, I got the opportunity to take the trades for more days, which sometimes is what we really would like to do, because we can make consistent pips. Nothing is clear or certain in Forex, and this we know for sure, so it's a game of probability. But the way I designed this model seems to be quite effective, because the important thing is that we do not analyze anymore Forex starting from the pairs. We start from the currencies. Then it's very easy with two currencies to make a pair. If I give you GBP and USD, you can basically instantaneously create the currencies GBP USD, and so for every other pair that our broker provides us to trade. So this element now is under testing, and I hope to give you new, and will be anyway a new enhancement that will be in the future versions of this algorithm. But I hope that this explanation provided you an inspiration on how to read the markets. So normally you should read the markets by having all the currency pairs. Here we have in only Euro US dollar, but if you see my previous videos, you see that I have also applied my algorithm to all the currency pairs for reading the chart values in the graphical section and in the hedging section. But we have also to analyze the market in terms of time and time frames, and see some kind of coherence that of course will be more sure in the longer time frames than in the shorter ones. So even if I make some assumptions on the lower time frames, what leads me to analyze the market and make an outlook for my trades, it's always in the daily, weekly and monthly. Sometimes also in the 4 hours, but this is in the very first hours of the day or of the beginning of the week. And then we know that on the Friday some fundamentals happenings occur, and we better stay out of the market. Okay. If you have any questions about that, feel free to write me an email or write a comment. And I thank you for watching all the videos I received every day, a lot of emails, and I can only reply to those ones who are more clear in their expositions. And of course you can always say your name, is not a problem. You see my name in my YouTube channel, so let's make it fair. But I'm very happy to be helpful to other people and to help them to have an idea of how to approach the Forex from a mathematical point of view, and with the simple rule that the bigger the value, the stronger is the currency, the smaller the value, the weaker is the currency. So it's a very simple concept that even a child can understand. Then there are some limitations that we can have because we don't know when to enter our trade. But the moment we know for sure that this situation is persistent in the market, it's just a matter of time. And if it's not the very first day, it can be the second or the third, but normally the cycle goes from 1 day to 3 days. It depends on how the market is at the beginning of the week, and we can anyway be successful and somehow generate profit focusing only on the currency pair that for real will have a movement in that context of the week. So thanks for watching, and have a great day, have a great time and space, as usual I say, and let's keep in contact with the next video. And for those of you that want to contact me directly anyway, or have information on my algorithm expert advisor, I always suggest that the better way is to use Skype instead of writing an email, because that will have priority. Okay, so stay well, and to the next video. Bye.